Hey there, YouTube. Last week I promised to show you my results again this week. So last week I had entered into several puts that my software had recommended, and I'm going to show you those results. Plus, I'm going to show you a huge one on Shopify. When we talked about that last week where I had gotten assigned, I worked my way out, and I made very nice profit. So let's take a look. So here's what I entered. Alibaba, Applied Materials, you see those ones highlighted. Those are the ones that I entered based on my software recommendation last week. And these are the spreads. So the spreads may differ slightly than what the software recommended because I go in on Monday morning and I look at the implied volatility and the expected move, and then I make the recommendation. Because the software runs over the weekend, it looks at the Friday closing price and makes its recommendation. Sometimes you have a bump up, and then therefore you have to move up your strike, or you have a down and you have to down your strike. So that said, I make my decision on Monday morning. You can go back and look at some previous videos on how I select the striking price. It's based on the implied volatility and the expected move. So with that, these are the positions that I entered. These are the spreads, all $500 spreads. So $5 spreads per contract means I'm using up $500. And that's my maximum risk is $500 per contract. So for each one of these, you see this first one, I got $26. While $26 doesn't sound like much, when you're using that on $500 investment, it's not bad. It's a 5.2%. So whether it's $500, $5,000, or $500,000, the math still works out the same. So you got a 5.2% return. And by the way, on some of these, I'll enter more than one contract because $500. In this case, I use $3,000 for the week, but I'll enter more than that because I want to get a little bit more return, and I'm playing with a little bit more than $3,000. But I'm just showing you this because you can do this with a very small account. All right, all week, all of these stayed up, except for CRM. I did take a bath on CRM. CRM, I lost almost the entire amount that I had put up for risk. And the reason that is because the move happened on Thursday. If it would have happened on Monday or Tuesday, I would have taken a lot less of a loss. But the problem is it dropped down to about 240. Well, this put that I bought to protect against further downside had no time value left. So there was nothing I could really do. I think that 240 strike might have sold for $1, and the 245 already was at the maximum point. So that's why it was around $332 loss. And I went ahead and closed it because I looked at the probabilities of it going back to 245 and getting above there was just not that good. And I'm glad I did. I'm glad I closed it because it actually closed out just a little over 240, like 240.35, something like that. And I would have ended up losing the full $500 investment. This is an active trading strategy, so you have to be able to make those decisions on the fly. So all that said, for the week, I lost 168, which was a 5.6. But keep in mind, all the weeks prior, if you've been following me, every single week has been a 100% success rate and has had about a 7 to an 11% return. So losing $168 when previous weeks were 10 to 11% return, that's not that big of a deal. Plus, I worked my way out of Shopify, which I showed you last week, and I made a very good amount, actually, that overcame this $168. So let's jump into that. So this is Shopify. Last week, you saw that I got assigned. We sold a $120 put the week before, somewhere around there. Let me change this color. And so we sold a $120 put because of unemployment and Friday's sell-off. It fell in sympathy, and as such, I got assigned. I believe last week the close was somewhere around 118.60, 65, something like that, which means I had to buy it at 120, but I got paid 28 cents. So my real cost basis was $119.72. So the price was $118 and change. That means I was down $100 or so per 100. So not a big deal. I was down about $200 for the week. I showed you last week what I was going to do to get out of it. Let me walk through that. So on Monday morning, the stock came back up. Futures actually showed that on Sunday night that the market was looking to go up. And then, of course, Monday morning it did. So in sympathy, Shopify rose with it. We had not had earnings yet. Earnings is here. So when it popped up here, this is what I ended up doing. Instead of, you remember last week I showed you that the expected move was around $14, either way, positive or negative. So we were going to buy a $120 or $118 put and they were going to go about $14 below that and sell a put because that was all that we were expecting it to move. So I did that. So it jumped up. It was around 122. So I sold a $122 call. And at the same time, I bought, now this of course would extend to the end of the week, but I sold this call for $7.60. That means if the stock went up, I'm going to get my 760 and the stock's going to get called away. But I bought a put at 121. So this is 121. I bought this guy because I wanted to protect my downside. I bought that for $6.40. So right there, you can see that I sold the call. I bought this is called a collar. I sold the call, bought a put, and that protects me on the downside, and I would have been up $1.20. That I would have made $1.20 just on that insurance anyways. But because the expected move was only $14, I went ahead and took that risk, and I said, you know what, let's go ahead and go. Now the index is, our Y index is 108, but let's just pretend that's 104. Okay, so this is where I put my put, 104. I sold that one for $1.77. So what I wanted to do is I wanted to finance. I was really interested in financing this guy. I wanted to pay for my insurance. And I really, at the end of the day, didn't want to pay for my insurance at all. And that's why I sold the call above. If you remember, I told you that if the stock goes through the roof, I lose out on the upside, but that was not what I was intending. I'm an investor, not a speculator, so I wanted to make sure that my investment was protected. So my insurance is going to cost me $6.40, but I paid for it using this and this, which means I actually got paid $2.97 or $297 per contract. That was my credit I received because my insurance was only $640. I sold this one, helped and offset that cost of my original insurance, made $297 for buying insurance. Man, what a deal. I got paid to buy insurance all the way down to 104. And look what happened. Earnings came out on August 6th. Stock shot up to $155, something like that. So I missed out on all that upside. I mean, $200 a share from 120 to 155 is 30. So you're $6,000 per, when I say $200, because I had 200 shares, $200 per point was $6,000 worth of profit. My call, of course, is taking a loss because it's going to get called away. So technically not really a loss, but if you just do them both side by side, yes, that one took a loss. And then those puts that I bought here, this is taking a loss. This one's got a credit. But again, at the end of the day, $297 of profit above 122. I missed out on a $6,000 move, but that's okay because what I ended up making was $297 per contract. The stock got called away at 122, so I got it. Remember, it was assigned to me last week for 120. It moved to 122, so that's $200. And I made $297 here, $200 here. So I walked away with $497 per contract, plus the 28 cents from before. You're talking about $497 plus 28 is roughly $525. So I made $525 working my way out of this. So what a beautiful trade. $525 per contract, so $1,050 more than ate up the $168 loss. That is what I wanted to show you, is how to work out of this. You can still get the insurance, paid to buy the insurance, and work your way out of it. Now, if it would have tanked, I would have showed you how to work out of it then. This is where derivatives, this is why I love derivatives. You can do a whole lot with derivatives and just protect yourself, make some gains while you're at it. And I hope you enjoyed this. I don't have any put sales for this coming week. If you would like to subscribe to that software and the list that it provides, let me know. Shoot me a note down in the comments. I do sell it for $75 a month. So just drop a link down in the comments or drop a note down in the comments that you wanted, or send me an email. If you have any questions on how this stuff works and you want to go in one-on-one on some of this stuff, I'd be glad to do that. Just again, let me know. So with that, happy trading, and we will see you next week. Thanks.